You know when you hear someone older than you say, back when I was your age, we had to hike to school and it was 15 miles in the snow and it was uphill both ways and we had to do it without our shoes on for whatever reason? Well, guess what? I am that grumpy old man. That's right. Because when I look around right now, I see how lucky a lot of you are in terms of the readily accessible information on the internet, especially as it relates to investing. But it can be a bit overwhelming. There are a lot of loud voices out there, and I can tell you for a fact, unfortunately, not all of them really know what they're doing. This is one of the reasons I decided to create our real estate entrepreneur and investing mentorship program. It's an intensive 10-week program designed to really supercharge your real estate career as quickly as possible and really provide a single resource that you can depend on for accurate information. Look, the truth is, I know you can figure this all out on your own. The challenge, though, is that it may take a decade to do so, like it took me. And I don't want you to waste your time. And more importantly, I don't want you to make one investing mistake, which could cost you greatly. So if you're interested in applying, we just opened up our applications for Q4 of 2020. You can head over to cfcmentorshipprogram.com and click apply now and set up your introductory call. All right, welcome back to the Cashflow Connections Real Estate Podcast. Today, we've got a really interesting episode. I saw a friend of mine that's in the industry that recently put on a spectacular event. I was fortunate enough to be asked to be a speaker at the event. And I know that a lot of us are extremely busy and they did tons and tons of hours of content. And I said, look, please come on the show to discuss the 5 bullet points of what you talked about, the synthesis of what you learned putting on this event, given the high caliber of the speakers that he was able to attract, present party excluded, of course. And so we jumped into it. And a couple of points that I thought he made that were really compelling were just, what systems can you create in your business to create some accountability, to really monitor how things are tracking? Humans tend to be compelled by gamification. So if you can actually be transparent in terms of your KPIs, you can actually see results just because you're measuring it. Right? There's a book on this topic, Measure What Matters. And so I thought that was a really compelling point. It also talks about modeling others. This industry, it's not necessary to be extremely innovative. There are companies out there that have created multi-generational wealth for themselves, and you can basically copy their playbook. Even if you do it 20% as good as them, it's still a very compelling industry to be in because of the predictability of income, the cash flow, and the depreciation benefits, along with a bunch of other stuff that I'm sure you're already familiar with. And lastly, yes, we do talk about mindset. It's fascinating to me that if you're going from 0 to 100 million or 100 million to 500 million or 500 million to 5 billion, the mindset plays such a crucial role in your ability to get to the next step. And it's almost cliche to say that, and I understand that. And for a long time, I didn't buy into that. But as we've experienced growth as a company, as our network has grown, and I've been able to rub shoulders with some very influential, very savvy people, it does seem to be the case that setting your mind to what you're going to accomplish is necessary to accomplish it. When you say it like that, it makes more sense and it's probably more readily apparent as far as why it's so frequently reoccurring. So, talk about it all in today's episode. Hope you enjoy it. How's it going, everyone? Today we have Gary Lipsky, who is the co-founder of APT Capital Group. He's invested in 1,700 units. They focus in Phoenix and Arizona markets. But today we're going to talk about something that I've been really impressed with that they put together recently, which is the Asset Management Summit, which was a really long, first of all, I got to commend you for that, multi-day summit where they had some really expert industry leaders come and talk and added a ton of value. You can actually learn more about that at www.amsummit2020.com. By the time this is announced, it will be over, but there's some resources available there, and it's very likely, I'm sure, that we'll be doing it in the future. So, Gary, thanks so much for coming on.
Thanks for having me. I'm a big fan of the show.
Much appreciated. So as this started to happen, I was trying to think of a way to kind of get the most out of this because I saw some of the sessions, I saw the speakers, and was like, I actually just want to know, streamlined approach, some of the things that you've learned. First of all, putting on this event, what inspired that? and also some of the key takeaways as far as what the guests actually shared.
Yeah, there's a lot of conferences out there on how to get your first deal, but there's very little out there on what to do after you get your first deal. So there was that niche that no one was talking about. And, my experience, I've been an entrepreneur my whole life, running businesses and a lot of operational experience. So that's I've been doing real estate for a few years, but that's really that's what I bring to the table, that business experience. So that makes me excel, or that allows me to excel in asset management. And I wanted to share that expertise. And one of the reasons why we put on this conference was to learn from others as well. I want to improve. And so, having 30 experts talk about asset management, I'm going to absorb a lot of information. So, a little bit, for my sake as well, that, I wanted to put on this summit.
Yeah, I really like that. And to your point, you're so right. I think it's where a lot of people fall short. I wrote my book about raising money. And I said, look, if you can't raise money, you're not going to be able to make any money in this business because you have to have money to close deals. But the truth is, if you can raise money and can't asset management, you got a big problem on your hand, the likes of which no deals would look like a freaking walk in the park. So I really like that, especially since it's the thing that is least sexy about this industry, but it's actually how you determine if you make money or not. It's actually and protect investor capital. So let's talk about it. What have been some of the key takeaways that you've learned listening to the sessions and also probably thinking through the topic yourself?
Yeah, absolutely. Well, first off, everything starts with great communication and proper follow through. That works for your business, that works for relationships, and certainly for asset management. So, laying out your expectations clearly ahead of time is super important. Whenever you're in a meeting, who's doing what, have a follow-up email with all the bullet points, who's agreed to what, when's it due by, put it in a Google document, because you have to have follow through. There's, when you're asset managing, there's so many different things going on. So if people can't clearly see what their task is, when it's due, it won't happen. It won't get done. So, that follow-up is so important. And then also, obviously, along the same thing is transparency. You don't want anyone hiding issues. There's going to be issues that pop up. We understand that. So, we want to praise people that talk about the issues, that bring up the issues versus punishing them, because then you want to train them to solve problems. So that, that's my point one. Great communication and proper follow-up are really key.
I really like that. So, the one thing that you just said that I think is just very powerful is sometimes as entrepreneurs, we tend to try to play whack-a-mole, and that puts us in a very reflective state. So if you see something that's wrong, that's the time to act. But the reality is being proactive and giving positive reinforcement is actually much more powerful, not only because it helps the person know that they're heading the right direction, those that are around realize what can be done if you actually do things well. So I really like that. Plus, it makes it a lot more enjoyable to go to work.
Yeah, absolutely. So point number two, like you said, being proactive versus reactive. Systems need to be in place now, not when things get bad. Like when COVID hits, we were ahead of the game because of all the things that we had done. And we had friends in the industry that were getting killed because of the system that they weren't lax. They were lax. They weren't good asset managers. They loved the art of getting the deal, but didn't know how to manage the deal. So, we go through everything. We ask a lot of questions, and it's not you're doing it wrong or do it this way. It's, we go with the mindset of, have you tried this? Have you tried that? And try to uncover different things. Leasing is obviously huge, because if you could, close the gap between, 93% to 97% economic occupancy, that's huge returns. And so we really focus on that. And so we do a lot of secret shopping. And so you've got to review the emails that go out, because typically it's not going to be up to your standards. Add pictures to that email, make it personal. The speed and the response is so important. And then have a link in every email to book an appointment and make sure there's follow-up. And Drew Niffin talked about this too at the conference. It's that leasing piece is so critical.
So I like that. Let's dive into some of the systems. So like at a property specific level, you mentioned leasing. What are some of the systems to bring that leasing up to those numbers that are more advantageous? Because like you said, going from 93 to 97 multiplied by 12 divided by a 5 cap, I mean, that's a big difference in terms of valuation. How do you create systems for that and then also ensure that those systems are actually working?
Yeah, so Neil Bawa has a great, the LASL system. And so it stands for leads, appointments, showings, applications, and leases. And so you break it down versus saying, well, how many leases did we get this week? 2. Oh, okay, there's nothing to measure. So we've got to break it down and see each part and focus on the conversion from one thing to the next. So how many leads to appointments? How many appointments lead to showings? How many showings lead to applications? And you break it down, and we have it on our report every week with our property manager. And, in the beginning, she really didn't pay attention to it. But each week we'd hammer it home, and she got it, and she was excited, and she was focusing on the conversions between each piece of it. And so now that's a leading indicator versus a lagging indicator. We can measure what we're doing to get the leases that we want to get. And we know, okay, we need, let's say, 50 leads a week to convert to 2 leases a week.
Yes. Is that a realistic projection, by the way, in terms of that metric?
Neil is driving a lot more leads to his properties. He uses VAs. But for us, on our 128 unit, we're getting about 40 to 50 leads a week and doing about 1.5 to 2 leases a week based on that conversion.
Okay.
There's areas for improvement, absolutely.
Sure. That makes sense. I think what's really telling there, you hear people talk about key performance indicators, and despite the talk, there are a lot of firms that fall short with this. You could just say, for example, the perfect example is just if you're tracking 2, okay, we got 2 leases. Is that good or bad? I mean, the difference between 2 or 3 is massive, but it could be like a sample size problem, for example. So if you don't know the totality of the funnel and you're not tracking it on a daily, weekly, quarterly, monthly basis, so that invertly, but you understand what I'm getting at, it's challenging. Another piece of this that I found for my firm especially is that having transparency from the previous in the same spreadsheet. So like just looking at how far we've come is great from a motivational standpoint. We have all of our information. We're on a podcast right now, so I'll talk about that, leading from when we started tracking it to now, and the graph looks like you would want it to look running a company. And by the way, human beings they tend to be compelled by this gamification. You can't help but want the graph to go up and to the right. Makes you feel good. So cool. Like that one a lot.
Yeah. Another one that we learned was, obviously property management companies tend to improve their systems and processes, when you are holding them accountable, when you manage them. So, obviously that's so important. And obviously leases are important. We try to identify bottlenecks in the renovation. So, they'll say, it's 30 days, but we try to break it down. Okay, is everything ordered ahead of time so that there's no, you're not waiting? And particularly now more than ever because of shipments coming in from China and whatnot. You want to walk the units that they say aren't ready yet because it might be silly stuff like they just didn't touch up something or put on a knob. And those 3 days are killers for you. If you can cut 3 days off of renovating a unit, let's say over 15 units, again, it's just huge returns on your NOI and boosting the value of the property. So all these different ways that we're trying to improve their systems and processes, because a lot of these companies just aren't as advanced. It's a very low margin business and they've got a lot of lifers in there. So we try to, improve their systems. And we had a lot of speakers talking about how they help their property management team be better at what they do.
Well, this is kind of an offshoot from the accountability point, but generally speaking, of the sponsors that you had speak or just kind of know of, what is the conversation like in terms of that vertical integration approach or quasi-hybrid approach or just a pure third-party kind of approach? How do you manage that and where do you lie on that side of the argument?
So I had a previous business that we had over 700 employees and 500 independent contractors, low wage earners. And so it was a low margin business and we did amazing things, but I'm not for owning a property management company personally, that vertical integration. I'd rather work with more of a younger, hungry team that we can kind of put in some of the things that we want them to measure, that we can be a lot more progressive. Because at times, I mean, I love my property management company, but sometimes we'll give an idea and she's like, well, that hasn't worked before. And we're like, well, let's give it a try. Let's see, because different things work in different submarkets and at different times. So we have to push them a little bit. But, other people love being vertically integrated. James Kandasamy we had on, Maureen Miles, and they talked about the successes of being able to control everything. And maybe, Kyle and I, we joke about we'll be owning a property management company 5 years from now because we want that control and we want to be that much better. But right now, I don't want to be vertically integrated. I'd rather work with the team and try to get them to do what we need them to do.
It's interesting that kind of segued into that unknowingly, but I think the issue with accountability is a really important part of that vertical integration standpoint. So when I first got into this business, I was hell-bent on trying to work with firms that were vertically integrated. I thought the economies of scale alone would make up some of the problems that you have. However, based on the conversations that I've had with the larger groups, even if they have reached a time or a moment in their career growth where they have the potential for vertical integration within one particular market, let's say, very few pursue that route. And I think it's because it's a different business. I mean, it's good to have transparency, but it's a different business. And this is something I've been thinking about recently. When you have a quasi vertical integration, let's say you have frequent daily, weekly, monthly meetings, for example, where you really have an open book of communication, that can create kind of the best of both worlds, where you're leveraging their economies of scale, their systems, their processes, especially their back office. But you still have competing firms that may have different interests, but your investors are going to gain when both firms gain. Does that make sense? In the sense that there may be a disagreement, but sometimes disagreements are good. That's one of the challenges with vertical integration. You are over allocated to one firm. In investing, we frequently hear, what's the best asset class? Should we get floating rate or fixed rate? All these things, but usually diversification is the best approach. The same may be true for property management in terms of relying solely on a third-party firm or just on the sponsor. So just wanted to touch on that. I think it's relevant. Anything else on accountability before we kind of switch up?
Nope. We can go on to the next one. Well, one of the things that we do is model others. So we had Meryl Callister on a few months ago on our podcast and just gave a 10 minutes on KPIs. And so today we had him on for a full hour on KPIs. And we definitely, took some ideas from him, how he measures things. We built out a system through a RealPage. They get all their information from Yardi Matrix. So we've got a much more robust system of KPIs. And really all the speakers, we're looking for different ideas. Danny Randazzo, he talked about digging into the details. And that's so important when asset managing. I mean, when we go through our financials, we always find mistakes in the financials. And if you're not digging through that 200-page document every month, and it's not fun, but boy, we find mistakes all the time. And, because the account on the property management side is managing 8 different properties, the regional manager might be signing off and not going through it. So it's those little details that will end up making a huge difference on your bottom line. And so you've got to take different ideas from different people to see what they're doing and put it into your business.
Let me ask you something. What would be some common or even not so common examples or even stories where you'd find those discrepancies, especially those in good faith?
Yeah. I mean, we have a small 42-unit building in Tucson, and we found a $10,000 plumbing charge on there. And so obviously that, stood out. And it was for another property. So
wow.
Yeah. Printer charges. What other common things? It's just the going through all the little details and trying to figure out what is misplaced, and even things that could be lower than normal still might have something wrong in there. And so it's just going through. It's tedious work, but every single month we'll find something.
That's very, very interesting. Okay. Modeling others, by the way, I will say that there's a million reasons to get into real estate space. One of them is which you don't need to be innovative. People have exceeded and achieved incredible things in this industry, and it's a relatively straightforward business. And you have to be good, you have to be business savvy, you have to be dedicated, but you don't have to come up with your own model. So I think that's actually a very humbling of the few that you've suggested. I mean, that's very humbling, right? To be like, well, this guy's doing it. I can just copy them ethically and do the same thing for our clients.
Yeah, absolutely. Absolutely. There's a ton of knowledge, and real estate, I mean, with your podcast, with other resources out there, there's just a ton of great information out there. And so it's not, you don't need to spend a lot of money to get that. A lot of it's free. Find out what other people are doing, and that'll help you provide rocket fuel for your business.
100%. Model others. What else you got?
Yeah. We had a $4 billion panel, Joe Fairless, Swan Nalagarwal, and Jeff Klotz, and they were talking about mindset, which was huge to their success. And I think, obviously that anyone can use that. Mindset is so important. Successful people do not complain. They are resourceful. They find ways to problem solve and get things done. And that's so critical for anyone.
Man, you are speaking my language. Let me just do a quick rant right here. So sometimes when I do speaking engagements, I tell people who are listening to podcasts that they should be reaching out to those who they hear on podcasts that have some kind of gut instinct that feels similar. They should be reaching out, trying to get information with them, share their story, et cetera. And one of the hacks for getting people to actually respond to those emails is to share a thing that they have in common with you, right? So I always say, like, I don't like the government, I like to work out, and I don't really like the public education system or the education system in general. That's like one of my three things. Now, the reason I don't like the typical education system is that it takes the most important element of being in business and being successful and inverts it, which is who, not how. That's the trick of business, being able to find the right people and using their resources to be resourceful. In school, you're typically taught you are everything. You need to know. And by the way, if you ask someone else for help, you're probably going to have to go to the principal's office because that's not allowed. That's the whole point, but that's exactly what business is. So I really like that. And then mindset, of course. How crazy is it that if you go to a panel to hear about what it really takes to own $4 billion worth of real estate cumulatively, and they say the same thing they're saying at the $300 panel or the $10 networking event, it's all that the ceiling isn't there, that the sky is truly the limit, and it doesn't matter which panel you're going into or which assets under management. They're still talking about the same thing. So give me like some of the takeaways there that some of those guys on that panel did talk about, like within the mindset paradigm.
Well, I mean, exactly like you said, there is no limit. There was a humbleness to them. It's just a matter of getting the work done. And, Joe Fairless said his greatest skill is resourcefulness. It's not. You're never defeated. You might not like the first solution. You might not like the second solution, but you've got to find a way to get it done. If you're working on a deal, and you're raising money, you've got to figure out how to raise your money. If you're asset managing and COVID strikes and you're not collecting as much rent and tenants are having problems, figure out a way to help them help you, whatever it is. So, I mean, we all know it. It's not brain science, but it's having that strength every day to know, like, I'm going to win the day and nothing's going to stop me. And, let's kill it.
Hey, listen, if you're listening to this and you are either working for an entrepreneur or, directly, or you have a job or you are an entrepreneur, people that have someone else as like the overlord to some degree, you tend to think that they have it all and that they know everything. And so you tend to go to them and say, look, I ran into a hurdle here. I don't know how to do this in Excel. Can you help me out? That person doesn't know everything. And what they have to do, by the way, to figure out how to do what you're asking for in Excel is Google it. And it's crazy how much you can do. By the way, if you have like an internship, for example, if you can just not ask that question and just Google it, the likelihood that you're going to get a raise or get a full-time position at this company is crazy because it's so rare. It's like the ultimate team members. It's just the difference of, do you know how to watch YouTube videos and then do that thing?
Yeah, I totally agree. Absolutely. We're all, created equal. There's no, there's very few geniuses out there. And so if everyone kind of, goes with that, going in, it just makes it, it's so much easier. It's not this giant task they overcame to get to $1 billion or whatnot. They just grind it and put in good work, and were transparent and built a great team around them. And that's how they got there day after day of doing it. And we're all capable of that.
Completely agree. Those are all really powerful. Let me ask you this. From your perspective, I know how much work it takes to put together something like this. When you look at it on a risk-adjusted basis, is it favorable? Will you do it again? How has it impacted your business? I'd love to hear.
Yeah, we actually scheduled the next one in April.
Great.
We're already, all for it. We had a great response. We didn't do it for the money. We did it for raising our game, for more exposure. And our brand is asset management. So, we wrote a book. We'll be coming out with that in a couple months. And it was for us to learn more as well to how to become a better operator and maybe potential partners with some of these people down the road. So it really opened up many doors for us. So we're going to keep rolling with it. We're going to keep learning. We're going to keep teaching others and have fun with it.
Love hearing that. The summit is such an excellent way to grow your list. Not only to grow your list, but also to reach out to those who you have a lot of respect for and want to learn from. And I'm sure that you probably share the sympathy, which is that if you found out today that you inadvertently hadn't launched the summit and the only person that attended it was you probably got so much out of it that it was probably worth your time alone, not to mention the leads or the notoriety or the reputation. So it's a really great strategy if you're in the process of building your brand. I can't say it enough. 99% of the people that are thinking that they should do it won't, which is why they're so cool. Add a lot of value really quickly. And if you do it for free, it's a crazy value add. So listen, I really appreciate you coming on. I know it was short notice to run through those. I'd love to have you on in the future once the book is done. And by the way, I should mention, thank you for having me speak at the event. I didn't say that, but I really appreciate it.
We appreciate you coming on. My phone was lighting up after your session of people saying, wow, that was great. That was great. So that was pretty cool.
Good to hear. And definitely glad it connected given the profile of the attendees and the speakers as well. So really appreciate it. Thanks again.
All right. Thank you, Honor.
All right, listeners, thanks for checking out the episode. As always, the contact information for our guest will be available in the show notes page, which is hosted on SoundCloud, iTunes, and Stitcher. Don't forget, if you want access to some of the free goodies that I'm talking about at the beginning of these episodes, like free ebooks, weekly investor emails, and articles about some of the most important investment-related topics, make sure that you have created an account with CFC because this stuff is automatically available. You can do this by going to cashflowconnections.com and signing up as an accredited investor. Of course, if you have any questions, feel free to email me at hunterthompson@cashflowconnections.com. Thanks again.